Hello everyone. For our Stock Track Investment Challenge presentation, we have it made by Michaela, Alberto, and Jane. So for our introduction, the Stock Investing Challenge was for us as a team to be responsible for managing a 100K portfolio over a short amount of time. Our team goal was to play it safe due to the lack of experience we all had with the stock market and make as much profit as we can. The team had to reflect on the growth and loss of the stocks purchased each week and figure out the next strategy. It all depended on how well our stocks were doing and how bad it was doing for what we were going to do next. The main strategy we had was to remain conservative with owning a few stocks to not make it too risky for us. We then kept track and followed each week with new information on the stocks we purchased. The team graphed the stocks, portfolio, and index for the period. And then the team came together to put this final report together based on the analysis and results of our data.
For our team investment philosophy and strategies, when we first started, we lacked experience going into this challenge, but our main goal was we decided as a group that we didn't want to take too many risks. We were afraid that taking big risk would have a negative impact on our portfolio. So for this reason, we decided that we were going to focus on stocks that were not risky and would more than likely have a positive impact on our portfolio. Our investment philosophy we decided on was conservative. We decided on being conservative due to the fact that we played it safe and did not want to take big risk. Our risk tolerance was average and we understood that our stocks would fluctuate frequently. We preferred to take risk and playing it safe. Our focus was on 8 companies. We decided that we didn't want to buy and sell stocks frequently. We thought it would be better to monitor our stocks each week and see how well or poorly they did. For that reason, we thought it was a safer option to focus on 8 stocks. The 8 stocks that we decided to invest in were Bank of America, ExxonMobil Corp, Disney, Nike, Microsoft, Google, Apple, and Amazon. We chose these 8 companies because they were more common and safer options. We did not want to choose companies that we did not know about. We also chose these stocks because they're companies that we purchase from or we use. Our strategy did change over time. In the beginning, we were just planning to invest in 1 or 2 stocks a week. We were going to add new stocks every week until we no longer had money to spend. However, we realized that instead of investing in a bunch of stocks, we would focus only on a certain number of stocks. And that's when our strategy changed to focusing on only 8 companies. We held our stock in companies for the whole challenge. This strategy did work to an extent, but we soon realized that we needed to add more shares to the stocks we invested in. We first started out with a random amount of shares in a stock just to see how well it was doing. However, we realized that if we planned to focus on only 8 companies, we needed to add more shares. This is when we began to purchase shares for the stocks we had already invested in. Our portfolio was very simple and we managed it very simply. However, it was a challenge just to manage the 8 stocks. It was a challenge to manage just the 8 stocks because they would fluctuate frequently and we were nervous whether we should sell them or continue to have shares in them. We did decide to wait them out and it did work in our favor.
So for our trading diary, we didn't start purchasing stocks until week 3. So for week 1 and for week 2, we just started making lists of future investments. And during week 3, that was when we first purchased our stocks, which was 4 companies, which were Amazon, Disney, Google, and Apple. And then we played it safe and only purchased a small amount of shares in each stocks. And then during week 4, the team monitored the stocks and purchased 2 more, which were Nike and Microsoft. We noticed that the stock slightly increased and then we continued to just monitor it for week 5. For week 6, we monitored our stocks and the stock slightly increased. That's when the team decided to purchase more shares in previous stocks after realizing how much money we have and how little of shares we had. We agreed to purchase 2 more stocks, which were Bank of America and ExxonMobil Corp. And then for week 6, which was the last week, we decided to purchase stocks and just focus on the ones we had. And then for week 7, the team monitored the stocks and the stocks did have a slight increase and a decrease in some. So for our week 8, that's when we made our last purchase. That's because we monitor our stocks and the stock slightly decreased. And with the remainder of our money, that's when we decide to add more share purchases in our stocks. For our final week, that's when we sold all of our shares and made a profit of $16,652, and the team was satisfied with the profit we made by how little our experience was with the stock market.
So, as we know, the simulation of stock trade Trak started in early February. As a team that we have no experience on this sort of situation, we decided to remain with 8 companies based on reputation. While these companies did have high levels of beta, such as Bank of America was 1.41, we knew that these companies over the long haul were going to grow and make us money. We understand that the purpose for beta is to measure a stock's volatility in response to the change occurring within the market. So, a beta of 1 suggests that the stock price is in coordination with the market. So any changes that happen in the market would affect that stock. The higher than 1 would mean it would be more unstable. Under 1, it would mean that prices are stable and that whatever happens in the market has less influence on the price. We know that we're not analysts nor have the experience, but we did take a conservative approach and careful analysis. With this approach, it resulted in us with a 6.2% return on our portfolio, which moved us from our rank from 33 to 11. Although this percentage is not what someone who invests would like to have, for rookies, it's an achievement, which totally beats losing money. Again, when we began, we invested in companies with undeniable professional reputation, regardless of the beta, because we know these companies, they care about their company's stock and their workers, so we know their impact is huge, and we know their their returns will go up over time. So keeping the beta readings in mind, we kept on investing in these 8 companies, like previously noted, Nike, Microsoft, Google, and we monitored every risk. We did notice that when we invested in Bank of America and XMobile, our risk levels did go up, especially on the 3rd week. But it wasn't too bad because we also looked for prices. We chose the best prices and then we made purchase orders, like buying Bank of America for $29.9 rather than 35.12. Since we were very cautious, we're not trying to diminish our returns by buying too much, so we only purchased a few at a time. In the end, we compared our portfolio with the SPY, and also the QQQ, and although we didn't end up with our 10% return goal, we did come close to it with a 6.2%. And we believe that the choice that we picked, such as our strategy with picking high levels of beta, resulted in low returns. But because we were diversified in the risk, such as we were in the banking sector, entertainment, software, commercial, and so forth, that gave us that 6.2% return because we were diversified. In the end, we ended up with more money and we didn't lose any money. So we're glad.
Okay, conclusion and lessons learned. So when we started off, it was rough and challenging. In the beginning, it was difficult to figure out how to invest in stocks and what was important to look for when investing. Due to our inexperience, the challenge was difficult, and we had to really think about everything to figure out which stocks would be great to invest in. Once we understood more about the stock market, we were able to begin investing and focusing on our stocks. It was a little difficult figuring out where exactly to invest and how much shares we should buy, and we were able to quickly figure this out and from there determine the amount of shares that we wanted to invest in. We learned that it was important to understand that companies will fluctuate in the stock market. When investing, you have to realize that companies will have good days and bad days. You cannot focus only on investing in companies that have good days because that can change. One moment your stock could be doing well and another it could be doing bad. We learned that you have to determine if you want to keep stocks and wait them out until they have a positive change. We also determined that when selling our shares, it should be at their highest value. We focused on selling our stock at the end of the challenge, which was fine, but we should have done it at its highest value. If you sell it at its highest value, you will gain more profit from it, and you want to make sure you're getting the most out of your stocks. And we decided that next time we would probably take more risk and be less conservative and maybe choose different companies that aren't as well known just to be a little more risky. But overall, it was a great experience and something we benefited from doing. Thank you for listening to our presentation.